Hey there, everyone. It's Christophe Choo from Christophe Choo Real Estate Group at Coldwell Banker Global Luxury Real Estate in Beverly Hills, California. I'm so happy and excited today to have Mark Cohen from Cohen Financial here on this video chat with us today. Mark has been one of the leaders in our mortgage industry nationwide in the United States for 35 years, longer than I've been around. I've been around 32 years, Mark 35 years, and we've been doing business probably about 20. And Mark has been one of the number one, actually has been number one mortgage originator in the US a number of times in a row, and in California multiple times. And I think, Mark, in like the last 10 years, you've done like $14 billion in mortgage originations for homes. Something like crazy like that, right?
Something like that, but probably in that range.
Yeah, you don't want to tout your your high things, and
That's old news.
it's old news. Yeah, you're right. You know, whatever, especially today, it's changing by the minute, right? But Mark has been one of my go-to guys in mortgages forever. And I remember about 6 years back, we were doing a loan on a $13 million purchase, and he got the loan funded and approved and closed in 7 days. I mean, I'd never seen that in my life. Anyways, that's the past. We want to deal with today. And, right now, there's been a lot of volatility in the market the last 3-4 weeks, even before that a little bit. But, people have a lot of questions about, should they refinance now? Should they wait? Will mortgage rates go lower? Look, I remember back you were around back in 1989 when I started in real estate, rates were 17, 18%. And I started selling real estate, I was 18 years old, and people bought and sold homes, and I didn't know rates were lower before. I just didn't even know. I mean, I had no concept. So now when rates are in the threes and even in the under three, if you've got a low mortgage, it's crazy. And then when buyers see rates go up a half a point or 3/4, oh, I want to buy right now, because their short-term memory is only the last 5-10 years, but you and I go back forever. So tell me, there's been a lot of volatility. What do you project, first of all, for rates coming the next 3, 4, 5, 6 months? What do you think is going to happen?
I think you have a lot of government support. There's a lot of factors go into the market. What's hurt the market in the last few weeks, especially on the jumbo loans, has been a lack of liquidity in the market. And that's happened is because the heavy losses in the stock market. And yes, it's bounced back in the last week or two nicely. So it's improving the mortgage market. So all these markets are interrelated together. So what's happened is there's been heavy margin selling and heavy selling in stocks, which means that people are losing money and they have to raise cash. When they do that, they're selling mortgage bonds and they're selling all equivalents. And so they have to raise cash, which depresses the prices, which brings down the level of liquidity that's available. So that has hurt the market dramatically. And also some of the programs the Fed has used has helped certain types of mortgages, but not other types. Whereas the jumbo loans have been hurt hard, right, because all the Fed's efforts have been towards the conforming loans, the loan amounts under 510 or so. So that money has taken away from money that'll be going towards the jumbo market.
Got it. So in your opinion, liquidity in the market, that's something that a lot of people don't really understand what that means. So can you share maybe a quick 30 seconds about what liquidity in the market means? Because we've seen a lot of headlines about that, but a lot of people don't know what liquidity in the market means.
So liquidity is money it's available for lending for mortgages. So what's happened is there's been new restrictions that banks have to meet certain liquidity or cash guidelines in their accounts in order to make these loans, because now they're being perceived as quote unquote higher and riskier loans, so they have to keep more on their books.
Right.
So that's less money to loan. So when there's perceived riskiness or unstableness, there's going to be higher requirements for cash. Therefore, not a lot of money. And most banks are just done on a certain type of loans, which we'll discuss later on, I'm sure. It stopped, and that it has a lot to do with the clientele that you have, because you have the upper end clientele. There are a lot of foreigners. That market is it's not gone, but it's been hurt for the short term.
Interesting. So liquidity means basically, from what I'm seeing day-to-day world, for those properties that are mortgaged, if you're not an A borrower or a B plus borrower, it's a lot harder to get a loan today than it was 3-4 weeks ago, correct?
It's literally stopped, and it's been a problem for me to a degree, and across the country for everybody. So basically, you had these banks who in Southern California, west side of town, a lot of people are self-employed and they don't necessarily show what they make on their tax
Right.
return. So the common thing, and which has really buoyed the market in the last couple of years, is good common sense lending. You show 12 months business bank statements and you get your determination on the loan at that point in time.
Right.
If you have good credit, then the rates, yes, you're going to pay a little premium to the rate. Rates are basically about a point higher, a point and a quarter higher than where if you're showing tax returns. But still, needless to say, rates are in the fours, and everybody's happy because and people aren't showing their tax returns because they maybe have a more aggressive write-off posture. But it is creating activity. Now with that gone temporarily, for the most part, except for maybe one or two places, it's hurt the number of transactions. There are a lot of things, programs that are frozen, therefore no.
So I'm curious about that. That's very interesting. So a month ago, if you were a typical Southern California luxury borrower, you make a lot of money, but you don't provide tax returns. What percentage of the market was available then? And like today, is that completely shut down, or it's just a much smaller availability for those buyers?
Not completely shut down, but you're going to have 40% down payments now.
Versus 20 or 30%.
We were doing loans at 90% to $1.5 million based on 12 months bank statements.
Okay.
Yeah, those rates were in the fives, but it created activity and for the market, and people that were selling that house would be buying other ones. So
right.
There was a lot of activity, and if you remember back in was it January and February in Southern California, the sales were up markedly, very, very strong sales numbers in Southern California.
Yeah.
Obviously, it's going to be a different story in March and April, especially April. But so where I was looking for is velocity. The velocity of transactions was tremendous. Now it's basically it's less for the time being. But there is good news on the way. I spoke with one of my people I do a lot of work with on Wall Street, and starting next week, they're going to start those programs again on a startup basis. So it's going to be a little slow, but it's going to come back.
Wonderful. Because in my opinion, I think right now we're kind of on a temporary pause in the entire planet and in the world of real estate. Selling homes, people are still buying and selling, but it's slowed down.
Yes.
The mortgage markets are in turmoil. But I truly believe once this pause button is lifted and the markets and the world starts, starting up again and getting back, I think we have a lot of lack of inventory, a lot of borrowers, great interest rates. Do you foresee in the next 3-4 months, once things start slowly moving towards normal, we're not going to get back to normal immediately, but it seems like that the mortgage markets are starting to change a little bit because the stock market's improved. There's a lot of equity in America right now. I've done a lot of videos with some top experts that we have a tremendous amount of equity in the United States in homes that we did not have in 2007, 2008. Back then we were 860 billion in mortgage debt. Now we're 220 billion. So that's a huge, significant difference. So do you see things lightening up?
I agree with you 100% with that, because if you think about it beforehand, what happened in 2007, 2008, it was an economic crisis, a banking crisis. Just the opposite here. This is a health crisis, which is just as bad because people are, unfortunately feel the physical consequences of that. But the bottom line is that there is a lot more activity, and the whole dynamics of the Southern California economy where we are is strong, so much more divergent than it has been in the past. So you have a lot of job creation, you have the social media companies, and you have a wide array of industries here, which have led the charge into a stronger economy here in Southern California. So I'm optimistic. It will take some time, but it will happen.
It will happen. I agree with that. So if buyers today that are thinking to buy in the next 2, 3, 5, 6 months, with the changes in the mortgage industry, what should they do now to prepare themselves, whether you're a high-end borrower, a starting borrower, what should they do now? I mean, obviously there's no spending right now because we can't go anywhere. We can't go shop. We can't go eat. So
not so much still go.
Other than online food deliveries, I haven't spent any money in the last couple of, 3-4 weeks. So that's a good thing in one sense.
Now we need to make some money.
Exactly. So what would you recommend to borrowers that are thinking, look, in the next 3, 4, 6 months, I'm going to take advantage of the low rates, refinance my home because, that's a great opportunity, or buy a new home and move up because prices may have softened a bit or may soften a bit. So what would your advice be to people to prepare themselves to be able to get the best possible mortgage in the next 30, 60, 90 days?
Well, I would start the process because it takes a little time, and I'm not saying now. It depends on your mortgage, on a refinance situation. What the situation is that's always what dictates it. But I'm convinced that you're going to see a more liquid market. So now's the time to start inquiring with who your clients deal with. Hopefully us, to start starting the process. And for a purchase, I'm always of the belief that if you find a house you like, because it's hard to find a house that one likes.
That's the hardest thing.
It's hard. You just go for the try to move forward with it, because if it goes down 5% or so, it doesn't really make a difference, because we all work hard to find something that we like.
I agree. I remember when we bought our house in 2000, I said to my wife, I said, we're buying at the top of the market, but it doesn't matter. We can afford the mortgage. And the prices, look, I've been through previous markets where they downturn. And I thought, well, back in the 90s, prices went down 30, 40%.
Sure.
I said, look, if the value goes down 40%, it doesn't matter. We're going to live here. We can still afford the payments. It doesn't matter. And our house is now worth 5 times more than what we paid in 2000. So I agree with you. And all the experts in my neighborhood, I called my broker friend and said, hey, what do you think I should pay? Everyone said I should pay what I felt I wanted to pay, but I had to pay almost 10% more than I wanted to pay because the seller wouldn't sell it. So I still thought, well, I'll buy it. And I bought it. And I'm so glad I did. So, and in my 32 years of experience, when buyers that have remorse are the ones that didn't follow my advice because they didn't want to pay the extra 2, 3, 4, 5% of what they felt it was worth at that particular time. So I'm really glad to hear it, because we've heard a lot of, the mortgage industry and everything's been so volatile. We've heard so many things, and you read the headlines and you don't really know what's the reality. So I'm glad to hear that you feel as one of the top experts in the entire country. And it's Mark Cohen Financial here in Los Angeles, and he's amazing. And as top as he is, you can call Mark, you can get a hold of him. He will talk to you. He gets the job done, which is, when you have trust with someone like that, it's so valuable and so important. So one thing that's been going around, I have not, knock on wood, experienced it so far. We've heard, I've heard from friends around the country that lenders are not funding. And I didn't even know what that means. So what does that really even mean?
Well, that happened, and unfortunately it happened to me. I've got it worked out, but it did happen to me. So basically it was happening most notably from mortgage banks on these bank statement loans, because they have their warehouse lines of credits from banks, and the banks were saying that a lot of liquidation. These banks didn't have the liquidity requirements, so they stopped the warehouse lines. So these bank statement loans weren't funding. So it happened, and to everybody. I mean, thousands of transactions across the country, and they still haven't resolved themselves. They will, and there's a couple of different ways to do it. So what I did, so I had a fair amount of them. I went on alternative methods with the 1-year tax return and said the 12 months bank statements. Some things worked out. Other ones just have to wait because they're large transactions. So they stopped funding loans because the warehouse lines got shut down because they couldn't meet their liquidity requirements.
Got it. And that's stuff that, look, even me in business for 32 years, look, you're a finance expert, and I always rely on someone like you to really educate me and my clients, but I don't know the ins and outs. Just like people in real estate who want to buy and sell a home. I know the ins and outs, but someone else may not. So, what percentage, I'm just curious, so in the last month or so, out of, let's say, 100 loans, what percentage were not funded because of that particular 20%, 30%?
Yeah, I'd say I had 20 loans. I'd say I had 20 loans, about 15, 20 loans. I got about 10 done, so I got about five to go. And it wasn't our Cohen problem, it's a nationwide problem. It happened across the country.
Right.
I've been in the business for 30 odd years, and this never happened. And even in 2007, 2008, the banks gave you fair warning that, hey, we're going to stop this program. But this is literally overnight and
right
control. And I'd like to hope that in my mind that I can foresee these things, but this just happened with just literally open overnight. Hey, we're not funding this loan. Our warehouse lines got closed.
And that's what because all of a sudden you hear about no funding, and I mean, I didn't even know what that meant. So, I'm like, what does that even mean? I contacted my escrow company. I said, what's going on? I said, I've heard about this, and she explained a little bit, and you've explained it. So it's a new world and new dynamic that we're dealing with. But so where do you feel once in the next 3 weeks, 4 weeks, month or so, when this is all over, do you foresee the stock market rebounding, financing to get back to 80% of liquidity and funding as it was before? What is your take in the future?
I think that the main thing, and I'm just trying to look at this from a realistic standpoint, like what I would do, is that I think that a lot depends on the recovery and the perception of what's going on with the virus, if it's safe and if they lift the restrictions. So I think there'll be a huge sigh of relief from people that they can join society. Everybody can get back into the swing of things. It's going to be slow, but I think that's what my opinion is based on, because any round two of these is going to be a problem. So I think people got to step into this slowly, and you're not going to go to a football game right now or a baseball game with 50,000 people. You're just going to gradually want to feel comfortable going out to a restaurant first and walk
Right.
the mall. So
Right.
I think it'll take a while, and also businesses have got crushed. So people aren't going to go maybe buy big houses right now. They're going to want to feel comfortable that they're back to their jobs and they're working and that they're making money. But I think that will come. And we're all as human beings, we're all creatures of habit. So I think before long it'll feel the benefits. But it could take a few months. So
Yes.
as soon as they reduce this quarantine situation.
Do you feel like most of us in the industry feel that things will not be back to normal, but they will start picking up slowly but surely and move forward in a positive direction?
Right, and it'll be also in the desirable areas, and the same thing, location, and just once people feel comfortable. So it'll be industry specific will lead the way. Like your clients are in technology will be fine, and maybe not so much in travel or other sectors, but social media.
Yeah. I'm curious, as far as I know, because we've had a couple of appraisals the last few weeks, appraisers are under essential services, so they're still allowed to go out and do things, correct? Are mortgage brokers essential services like real estate brokers?
I'm a financial institution, so yeah.
Oh, good. I figured that.
People say work from your house. Well, I've got hundreds of files here, and hundreds of calls a day, literally, and just putting work on office at home. So I'm here, and we practice social distancing, and so it's fun.
Same with me. I come to my office every day. There's no my staff's been gone for 3 weeks, and they're gone. But I'm here on my own, social distancing. I don't see anybody, but I still got to close my deals just like you do. I mean, and you got probably more phone calls now about questions and what's going on and issues to solve. I mean, look, let's face it, we're problem solvers in our industry. Look, some loans are easy. They're easy. Some deals are easy. We close them, but a certain percentage of time, we just got to solve the problems. That's why we get paid the big bucks, because we know how to do that.
Yeah, I have, and I feel like I have the responsibility because I can't let people down and so forth.
Yeah.
So I'm here. Obviously, God forbid, major problems, but hey, it's my passion. Done this for 35 years, and I love the business.
You've always been so responsive, and you being the head of one of the biggest mortgage companies in the entire nation, I can text you, I can call you, and you respond, which is so rare. I mean, sometimes you call real estate agents that are not even big agents, you don't get a return call for 3 days. You were responsive, and that's one of the reasons why you're so very successful, because you really, truly care about your clients, you take care of people, and you take the time. Whenever I have a question, I call you, you answer it, you don't seem rushed, you really want to help me and the clients walk through that process, which is a great thing and a very, very special thing.
Well, I appreciate that, and you're the same way with your clients. And it's important. You have to be professional about it and have a compassionate side of you to do it, because anybody can do any kind of job, but what separates the men from the boys is the extra steps you do for your clients.
Exactly. And I've been telling my staff that like, this is the time where the men from the boys are separated. Look, a lot of people are being furloughed, being left out of their companies. And if you can offer value to your employer, you're going to be kept on. If you don't, you're going to be gone. And look, you've seen that all across every industry in America and the world the last, 2, 3 weeks.
Yeah.
So, but you are like me, I'm sure, where you have great employees and look, it's challenging for all of us to work under these particular conditions, aside from what we're used to. So again, with mortgages, if I want to refinance, I want to buy in the next 3, 4 months, what do I need to do right now to prepare?
Well, I think you'd have a discussion with who you want to work with, and we have here a wide array of products, and a lot of the banks now are just saying, "Hey, we're too busy doing SBA loans now, or we can't do cash out refinance deals." So that's where we could have our advantage, because we're much more versatile than the bigger banks. So
And you also work with a lot of private lenders. I know in the past, you have a lot of private resources that a lot of people do not have. That
yeah, that's for the private party loans, which are harder money loans. People need quick construction money. The house is under construction. They need a few $100,000 to finish the house, that type of thing.
Right, right. And how are you staying sane through this time? I mean, with the stress of a family and running a business and employees and helping clients that are stressed out, how are you dealing with this day to day?
Well, it's a simplified lifestyle, so which takes up a lot of my time on the weekends, and I just home, do a little work, watch Netflix fan, I take a lot of long runs now, which I've always done, and it's amazing what the slower pace of life. I just drove home from my son's house last night. He lives by the Grove, and literally I live right in my office, right by my house, Beverly Hills, and I saw 10 cars at 10 o'clock last night. So it's slower. So it's slower pace. So everybody's just home with their
It is
families.
so weird to go out in the streets and there's no cars, there's nobody walking. It's just, I don't know about you, but every day I feel like I'm in a dream. Like this isn't even real, especially coming to the office every day and there's no one here to talk to or communicate with. It's just like,
Yeah, I'm looking down at Rodeo Drive from my office here. Not a soul to be found.
exactly, exactly.
So
Well, again, I appreciate everything you do. You've been such a beacon of light in the mortgage industry for so many of us for so many years. And every loan we've sent to you and done with you has been done smoothly, successfully. Look, now with the challenges more than ever, it's important that borrowers and agents have the right mortgage broker that really knows what they're doing. And let's face it, I mean, there's so many real estate agents, and I'm sure in your business as well, that are 5, 6, 7 years in the business. And yeah, they've done well riding the hot market, but those of us have been around for 20, 30, I mean, 3+ decades.
well, there's a reason why you've been around for so long. You do a great job, and myself, just consistency and always there. That's the
we're
way
survivors and we're consistent and we're always, I mean, to me right now in these times, and since there's a lot of free time, being able to share these kinds of important videos to my consumer base so that they can understand what's going on, prepare themselves, whatever they want to do, whether they want to buy, they want to sell, they want to refinance. But anyone who has not refinanced in the last 1.5, 2 years, to me, this is an opportune time. Look, even if you spend a point or so to get a refinance, in the long run, if you're going to be there the next 10, 15, 20 years, and these 15-year mortgages still out there? I didn't even check on that.
they're very popular because on the loan amounts up to 765 or they're 2.75%. So I mean it's
Wow.
yeah, so it's cheap. Little restrictions, but or guidelines, but plan on that. 2.75, 2.78%. So those are attractive, and once again, the jumbo categories are in the lower threes. The jumbo market is the unsteady part right now a little bit, but I just tell my clients let's wait and see. I have a lot of clients who are just waiting for the right moments, and we just wait, no rush. And when it's the right time, they move forward. But we are in a position to.
Yeah. Is there some way, one of the things I love about what you do is every single Monday morning, I plan for it, Monday morning at your newsletter, every Monday like clockwork. And you give all the current mortgage rates and all the different programs and loans is like 15 categories. And then you give an overall summary that I'm sure you write about what's going on in the finance world, what's affecting the mortgage rates. So I love that. How can someone subscribe to that email? Like, how can they do that?
Oh, my pleasure and honor. Just when I talk to a client, they can email me or just call. And happy to put them on. We'll never hear from else. Happy to put them on the list.
Okay,
No,
so because I'm going to post your website link and all of the videos when I post this all around social media. So if they go to the website, can they subscribe on the website to your email list?
it's going to be best to be most efficient if they just send me a quick email. Please add me to your email list.
Okay, so I can just put your email address in that I have, your personal email, and just put that in there and say, just email Mark to get your email weekly update list. Because that to me, it's not just the rates, because a lot of brokers send you the rates every week, but you give the story behind the rates. You talk about what happened this week and what you're expecting to happen next week.
And the factors why the rates are what they are, just a general economic overview.
Right.
Yeah, it's easy, and they'll be on in perpetuity until they.
Wonderful. Well, I love those. And every Monday morning, I'm like, where's Mark's email? Where's Mark? And I have a little Mark email on my saved emails where I save it, because sometimes during the week, I will do a talk about mortgages and I will print your sheet and your notes, and I will kind of rehash kind of what you talked about. I'm just kind of sharing what you talked about. So again, thank you for being such an expert in our industry and for helping so many of my clients over the years and continuing to help my clients and being a beacon of light in our industry to help share information. And I appreciate you sharing your thoughts today. And let's close some loans. Let's get things back on track. And thank you for everything,
Get
Mark.
this economy going here again.
Exactly.
Well,
Thanks, Mark.
Thank you very much for the interview. Really
My
appreciate it.
pleasure.
I'll talk to you soon.